Hey YouTube family, Mike Jones here, back with another video. Welcome to my channel, where we talk about all things investing and personal finance with the hopes that we will be able to inspire someone to start their financial journey today. Now before we get started with this video, I would love to go ahead and give a huge shout out to the people that are already a part of my YouTube community who have helped me get to 100 subscribers. If you're new here, make sure that you go ahead and subscribe and hit that notification bell so that you never miss out on another video. I'd also like to give a special thanks to my beautiful and supportive girlfriend who has been a part of this journey and been a big supporter of it. But today, without further ado, we will be revealing my Robinhood portfolio and going over some of the stocks in it. And we'll get right into that right after this. Welcome back YouTube family. So we're going to go ahead and get started right into my Robinhood portfolio. So without further ado, let's get into it. Alright, so as you can see, I'm down about $370 as of right now after Friday's day in the stock market. But actually altogether, I'm actually down about $1,700 between Thursday and Friday. Now you may be wondering, why exactly am I smiling about this? Well, the reason being is because I sincerely believe that no matter how many dips you go through in the stock market, there's always a chance for you to recover and for it to do well for you. So without further ado, we'll go ahead and go into a little deeper dive of what my Robinhood portfolio looks like right now. I won't show you all the stocks that I have, but I'll go through a couple and I'll show you what I've done in just the last 6 months. Because honestly, I've had this Robinhood portfolio for about a year, but I didn't really start investing in this Robinhood portfolio until late February, and I really didn't put more than $1,000 into this account until the shutdown, which was about March 16th. So let's go ahead and look at what progress I've made over the last couple of months. So obviously that first one day says that I'm down about almost $400. But if we look at 1 week, we're down $1,000 for the week, because pretty much all our gains plus a little excess was erased by this past 2 days. So there's really nothing you can do about that. But in the past month, I've gained over $975, up about 4.32% in my account. In the past 3 months, we're up about $3,134 in the account, and that's up 15.35%. In the past year, which is not even a year because it's only been practically 5.5, maybe 6 months since I've really started to delve into this account, we're up $5,435.60, which puts us right at 30% for the last 6 months. On all, it's down, or it's up $5,400.26. It's up about $5,426.30, or about 29.94%. Now, before the last 2 days happened on Thursday and Friday, I actually was up almost 40% in this account. But like I said, I lost pretty much $1,700 over the last couple of days. So as you can see here in the after hours movement, Tesla is down, 6.29%. At around $392 in after hours trading. Carvana is down 5.80%, and it's about $187 right now. We have SHLL, which is up 3.32% to $52.02 in our after hours trading. So we're just gonna go ahead and erase all of that for the news. As you can see here, I actually have one options trading call that I decided to go ahead and buy. And the reason I went ahead and bought this call was because it only cost me about $10, and I've been doing a little research on options. So definitely stick around so you can see a video about that, because I definitely will be doing a video about what options are and if it's for you or if it's not for you. Now, I will tell you that although I respect trading and I respect traders, as far as like day traders, swing traders, all that kind of stuff, I respect that. I personally am not into trading, but I looked at options, I did a little research, and I think it could be a plausible option for me, no pun intended, if I decide to do that. But I would only decide to do about 1 to 2% of my whole portfolio investing in calls. And I would do calls because I'm not a very bearish person. I look at things from an optimistic point of view, and I know that the stock market reflects that in the same way over the past 150 years. Yes, there are bearish times in the market, and we are in one in the last 2 days, but over the long haul, that is not the case. And if you look at any 10-year period in the market, you can clearly see that there's always been a positive gain. It's never been negative in 150 years. So with that said, we're gonna go ahead and move on to my actual stocks. The first stock we have here is ticker symbol GE, which stands for General Electric, and it is at $6.42 a share right now. And this was actually my very first purchase in my Robinhood account, along with the other couple stocks that I'll show you during this video. But this was my very first purchase, and to be completely honest, the reason that I bought GE is because I truly believed that it was something that I could be a part of and something that I could keep. And part of the reasoning for that was because I have always known about GE. I've seen GE everywhere I went, and I figured it's a reliable company. Now, the big mistake that I didn't make with this is that I didn't do any research on GE before I actually went ahead and invested in it. And that's my number one rule, is to do your due diligence. Make sure you actually know a little bit about the company before you go ahead and invest in it. But I'm gonna go ahead and show you what happened and how untimely my purchase in GE was, because I made my purchase about February 20th in GE, and I went full bullish. So in this account, I have 42 shares, but in my other account, which I will reveal to you later, I have 100 shares of GE, and I bought them at the same time. So let me go ahead and show you what happened here. So I have 42.062687 shares of GE due to the dividends, and I bought, or the market value is actually $270.04 right now. I bought at an average cost of about $9.54 a share, and it makes up about 1.15% of my portfolio diversity, which is actually a really good thing because it's not really affecting my account due to its cost and its market value in my account. But over the last 6 months, it's done nothing but negative for me. So I bought it on February 20th or 28th, something like that, and then the shutdown happened on March 16th or so, and it immediately lost $3 per share. So I'm down $131.24 in this account, or in this holding, and that is a negative 32% return for me. So as you can see, it's still a buy, and it's a buy because of the share price right now. I'd actually suggest buying some GE because it is $3 or so undervalued. But when I bought it because I had seen it at about $13 a share, and so I thought, that was gonna be easy profits. But you know, I will keep this company until I make my gains on it, and then I will sell off probably half of my shares and keep the other shares. But I've had this for about 6 months, so I have another 6 months before I can even sell it. So moving on, we have GoPro, and it is $4.16 a share right now. I bought my shares at an average cost of $4.73, and its market value is about $8.32 right now. And as you can see, there's a total return of negative $1.14, and we are negative 12% on this holding. So moving on, that's another company I did no research on. I just went ahead and decided to invest in them because I know the name. The next company is a company I barely looked at, but decided to go ahead and invest in them as well. And that is Wheeler Real Estate Investment Trust, which is $2.41 right now. And I bought 11 shares of this just because when I started my Robinhood account, I started with $100. And with that $100, these are the companies that I bought aimlessly. No research, no background behind them. Just went ahead and bought a couple companies because honestly, if you know nothing about the market, it is better to go ahead and just dive in instead of waiting until you think you have done enough research. But you also should do your due diligence and do research on at least 3 or 4 companies before you get started. Now, that's not to say that you do your due diligence and research and you find these solid companies that they're going to perform well from you right away. So just don't get discouraged, and just get started, because time is a wasting time that you could be making money, that you could be learning as you go. So that's my advice for you guys. But like I said, I bought 11 shares of this at an average cost of $1.44, and it's a market value of about $26.51, and I've made 67.89% return on this. So $10.72 is what I've made on this company. I think I got fortunate with this company because, as you can see, they have no PE ratio. They don't have much as far as information, especially on Robinhood. They don't have much information. You really have to do the work outside of Robinhood. But as you can see, they're like a small REIT that's located in Virginia Beach, Virginia, which I actually used to live in Virginia. So I think that's probably why I decided to go ahead and be a part of this company to kind of support. But it's better to go ahead and do your research. As you can see, their market cap is extremely small. So it's not something I suggest to go in and aimlessly buy companies. Definitely do your research on about 3 or 4 companies before you get started. But moving on, we have the Ford, which is another company that seemed like a no-brainer at the time. Didn't really do any research. I bought each share at an average cost of $5.94, and my return is $2.87 with a 16% return so far. Another company I went ahead and just bought Ford because I know the name and I know they're super popular. I know they make lots of sales. I mean, the market cap is $27.45 billion. So I figured it would be okay. But moving on, we have Fitbit, which I have 2 shares of that at an average cost of $3.80. I knew this was another solid or another popular company, so I went ahead and made some purchases on that, and my return is about plus 66% on that, and I've made $5 off of them. I do see Fitbit being a long-term hold for me because they have ties to Google and I'm hoping that Google can take them to the next step or the next level. So we'll see what happens with Fitbit. But moving on, we have one of my worst buys in my portfolio, which is Washington Prime Group. And Washington Prime Group is another company I didn't do research on. I knew they paid a dividend. They also kind of manage everything around retail, so they're probably considered a REIT. And I really have fallen in love with REITs, so that's probably why I bought this company. But I bought it at an average cost of about 94 cents a share, and I am down $1.12 with a negative 29% return so far. So my next company is Waste Management, and this was the first company I actually did some research on, but I actually liked Waste Management going into it. I knew that they were a solid company. I looked at their dividends, I looked at their balance sheet, and I really liked what I saw, and I knew there was room for growth. So I went ahead and made a buy at an average cost of about $108.88 a share, and I have a total return of about $4.65 and a positive 2% return. So moving on to the next company, I definitely want to buy more Waste Management. The next company I bought was GM, another no-brainer for me. Didn't do much research on them, but I figured GM is a pretty solid company. And this was all before I started doing extensive research. Now, a little background for you. I actually have done about 3 years of extensive research on the market before I even ever got started investing myself. But I never looked into brokerages. I mostly focused on 401ks, Roth IRAs, and those kind of funds, traditional investing funds. But a brokerage was totally foreign to me when I opened this account. And it was also pretty foreign to me about 7 months ago. So that's why some of these buys are just kind of impulsive and seeing what I can get out of them. So with GM, I bought it at an average cost of $30.03. As you can see, I haven't lost much. It's a negative 3% or negative 3-cent return. But it's a company I'm definitely going to be holding, and a company I will probably be buying more shares of. Now, I had a chance to go ahead and buy it while it was at $24 a share, but I did not do that. So now I have to just go ahead and buy it at its regular cost. Because one of the great things about investing is that you can dollar cost average, and when the stock's down, you can get it at a discount. When the stock's up, you still buy, and the reason you still buy is because over the long haul, dollar cost averaging definitely beats trying to time the market every single time. So moving on, we have Verizon, which is a super solid company with a great dividend, and I would highly suggest them to you. Right now, they are at $60.55 a share, and I bought 4 shares at an average cost of $54.45. So I am up $24.53 in this stock, and a positive 11% return as well. Now, as far as the dividend, their dividend yield is at just about 4%. And so what that means is over the year, Verizon will pay me about 70 cents per quarter for holding their share, and that's per share. So 70 cents times 4, so about $2.80 per quarter for the year. So $2.80 times 4 is about $10 for the year, and I'm really happy with that. So I'm definitely want to get in on a couple more shares of Verizon. My next company is one I'm really bullish on as well, and that company is AT&T, ticker symbol T, and it's at $29.50 a share. I have 25 shares, and the decimal point is just all the dividends that I've gotten from this company. I bought an average cost of $30.30 a share, which is definitely fair value for this company. But I definitely think there will be massive growth over the next 5 years. I'm down about $20.21 in this company right now, and a negative 2% return for this company. Another company I would definitely check out if you are looking for stocks that pay dividend payouts. The next company that I bought, I only bought one share of this company. And the reason I only bought one share is because I actually got a free share from sharing this with a friend through a referral. So as the link down below depicts, you can go ahead, and if you open up a Robinhood account through my link, you can go ahead and get a free stock as soon as you open up the account. And that's what happened with this. So you get a free stock and I get a free stock. And I also have a Webull link, which actually with the investment or deposit of $100 will also give you 2 free shares as soon as they clear your account and activate it. And I'll get 1 or 2 free shares from Webull as well. But I bought a share of this company at about $3.55, and I have 2 shares. So I got the free share and the one that I bought, and it's done nothing but excel over that time. The market value is about $18.68, and I've gained $14.91 in this company, with about 395% positive return. So I'm really happy with that. It's a pharmaceutical company if you want to check them out. I definitely haven't done my research on that, but it was a free share that I got, and I just went for it. So sometimes your instincts will play a role on what kind of stocks that you'll buy, but I definitely suggest doing a little research. And if after doing a little research and maybe even talking to a licensed professional, if you still don't have a decisive answer on buying the stock that you're thinking about, definitely go with your instincts, because my instincts have definitely played a role in the success, the short-time success of this Robinhood account. The next company I got was also a free stock, and this is ticker symbol MRO, or Marathon Oil. And I bought this. I didn't buy this company at all, so it didn't cost me anything. So everything in this company is positive, regardless of if I win or lose, or this stock loses money. Moving on, stock that we all know, and that stock is Tesla. I have 7 shares. Before the stock split, I had 1 share of Tesla. So after the stock split, I actually bought 2 extra shares of Tesla, and because of the stock split, I got my share split into 5 shares. And I bought my original share at $389. And that turned out to be an amazing return for me. This is a company that needs no introduction, even though it's lost about $600 over the last 2 days. For me personally, I know that in the long run it'll rebound, so I'm not really worried about it. If you just look at the week, it's lost $52 per share, and then if you look at the month, it was up $93. Last 3 months, $208. Over the year, $346. So this company is going to the moon. That's a phrase I like to use on Twitter. So just, go along for the ride and be happy with the ride. Definitely get in on some Tesla. But I bought this, or my average cost for this company is $188.31. I have 7 shares. My return is $1,425.86 with 108% or 108% return. So really happy with that. It was like a 400% return before the split, but I'll take 100% return. My next company is Google, ticker symbol GOOGL, and this is a Class A share. I bought this company at an average cost of $1,089.46. And since I bought this company in March or early April, it has given me a plus $491.75 return, which is about a positive 45% return. So Google is a no-brainer. If you happen to be able to get a share of Google, I definitely suggest it. Now, if you want to get in on Google and you just don't have $1,600 to do so, I definitely suggest, especially with Robinhood or companies like Fidelity, they have fractional shares. So I definitely suggest going ahead and enabling the fractional shares or the DRIP option, which is the dividend reinvestment option. And that will allow you to buy fractional shares of Google, buying $50 at a time of Google. In over a year, you'll have Google. It'll actually only take you about 30 weeks. If you do $50 each week and you put that in each week for Google, you'll have Google in about 2/3 of the year. So moving on, we have ticker symbol CAT or CAT, which stands for Caterpillar. It's the #1 construction company I'm interested in, so I went ahead and bought 2 shares of this at an average cost of $104.72. Over the period that I bought it, it has gained $87.88, or a positive 41% return. Now, the reason I bought Caterpillar is because I went ahead and looked at their balance sheet. I looked at their dividend history. I loved what I saw, and I saw a huge opportunity for growth as well. Another thing that I saw, I've been very observant over the last 6 months when it comes to my companies that I'm looking at. And one of the things that I like to do is when I'm driving around or my girlfriend's driving around, I like to look at what companies are operating and what they're doing. So when the whole shutdown happened, I saw that construction did not cease. It continued, and I still saw houses being built in my area. And so I took that as a cue that I should probably get in on some construction. So using cues like that may also help you to decide which companies you want to go ahead and invest in. Moving on, we're going to talk about a couple more companies. We're actually going to end it on Amazon. But my next company that I bought was 1 share of Boeing, which is ticker symbol BA. And it's about $170.91 a share right now. And I bought it at an average cost of $99.66. And over that time, I have gained $71.25 in this company, which is about a 71% return. I definitely want to buy about 2 more shares of this company because if you look at its history, we'll go 1 week, that's down $3.61. Over the month, it's down $2. Over the last 3 months, it's down $52. And if you look at over the last year, it is down $190.70, which is 52.74% over the past year decrease. And so I fully expect that when the economy bounces back, so will Boeing. It's also backed by the government, so I don't see it going anywhere anytime soon. I don't see any chances of bankruptcy. So I would definitely at least buy 1 share of this company because the growth is there to be made. And so don't be afraid to buy the dip is the main point. So we also have SPHD. I have 1 share of this. I bought this at average cost of $28.71, and I have one share, and over that time it's gained $5.78 with a 19% return. Definitely want to get in on this company. This is actually ETF, which is a collection of stocks under one fund. And what that means is that it allows you to be diversified under one entity. And this ETF actually allows you to go ahead and get paid a monthly dividend. So that's something that you definitely want to check out. And then we have 2 shares of United States Steel. And I did not buy this company at all, as you can see, but it does pay a little small dividend, so I'm happy about that. And we are up $15.64 because we didn't pay anything for this company. Lastly, we will talk about Amazon. And of course, Amazon is a company that is a definite buy at all times. It's not even something that you really have to think about. But I went ahead and it's currently $3,251.21, and it's down over $100. Like I said, over the last 2 days, some of the biggest companies took a big dip. I think the Dow lost 900 points. But I bought this company at $1,890.53, which to date is my definitely my biggest buy for any company.
Oh, hell no!
$1,890.53, and I bought it all at once. So that was definitely scary for me. Even though I know how solid of a company Amazon is, it still was something that took guts, I would say. But it's definitely paid off, even in the short term. Since then, I have a total return of $1,360 or $1,360.60, with a 72% return over the last 4 or 5 months that I've had the company. So I'm very happy with that. And this is where we're gonna go ahead and end the screen recording. But I want to go ahead and show you this video, or show you my portfolio to inspire you that you don't have to know everything about the market when you first start. You just have to get started. And it's like that with a lot of things in life. You just have to get started because you never know what the potential of something is. So I hope that this video inspires you. I hope that you enjoyed this, and if you did, please go ahead and comment down below. Make sure you like and subscribe, and let me know if this video helped you. I'll see you in the next video, and thank you so much for watching.